Hello, we've seen a nice bounce in the euro dollar and gold since mid-December. We believe that the downtrend is not quite over yet and that they may resume that downtrend over the next few days. We'll first start with the euro on our fingraphs.com platform. This is a weekly chart, so it gives the perspective over the next few quarters. What we could see is that the weekly chart of the euro is still in a downtrend, and thus this downtrend could possibly make it as low as parity. There's still some time left in this move, which means that it's too early yet to call a potential reversal up. That said, the risk index is now heavily oversold, so that although we do believe we could see some retracement or a new retest of lows over the next few weeks, we are slowly getting to a point where the potential down could be exhausted in terms of risks and slowly in terms of targets. Now looking at the daily chart or the perspective over the next few months, the downtrend here is also in place and doesn't seem quite over yet either. We could see the reaction up that we've seen since mid-December, yet the downtrend, given our targets, could extend another month or so and bring us back down towards the lows that we've seen, slightly below 104, possibly down to 101.40. We've seen initial stress in the risk indicator. It was oversold in December. We think we could possibly see a retest towards the second part of February. Now looking at the hourly or the perspective over the next few weeks, we can see the rally since mid-December. It is still in a bull trend, but it's pretty much reached its targets, and it has pretty much entered the time frame where we could expect this move to end. Although it could still work a bit and re-enter the ellipse here, we think that the risk index has probably turned. So this is possibly a resumed downtrend situation on the hourly chart. Putting it all together, you have a weekly chart which is still heading down but is slowly getting exhausted. You have a daily chart which is also still heading down and is showing some signs of exhaustion but could retest once more. And you have an hourly chart which has had a bounce and which could be in the process of resuming its downtrend. Gold shows a similar situation. We were in a weak correction up, which pretty much backfired in the second half of 2016. And at the moment, we can see that we are seeing some exaggerations. So our envelopes are touching each other and our risk index is oversold. Yet we believe that also here, and we'll flip to the daily chart, the current downtrend is not quite over yet. So we've seen the bounce from mid-December, but our targets in time don't seem quite over yet. So also here we would expect some retracement, possibly a retest of the lows during February, possibly early March. Now looking at the hourly or the perspective over the next few weeks, it seems that it's a bit more advanced than what we've seen on the euro. It has already started to turn and it has reached its corrective targets down. These often act as support, so you can see a bit of work here, but if gold manages to make it back below 1165 or 1166 here, we would have a confirmation of this resumed downtrend situation. Now if we look at the summary, a very weak uptrend on the weekly, but possibly oversold, so some kind of a base here. Yet the daily doesn't seem quite over yet to the downside, and we would expect another month, a month and a half to go to retest lows. And the hourly seems to go in that direction, but still needs to confirm that it can make it below impulsive targets, corrective targets down to accelerate into this move. Now, what does it mean? It does mean that the reflation trade that we've seen since mid last year, or more acutely since the election of Mr. Trump, is not quite over yet. And that's what we could see on equity markets. So here we have the many S&P futures. This is the weekly chart. It is still heading up. It's seeing a bit of stress on the envelopes, but not yet on the risk index. The targets have been done. We could yet calculate another level, impulsive 2 targets, which could lead us pretty much higher into the 2500. And at the moment, we could see, well, it's moving up, it's expensive, but it's not at risk yet. Looking at the daily is in a similar situation. It has entered its targets. It's not at stress either yet. We've had a bit of a try here, but it didn't really make it up to overbought. And it could yet be another last move. And we believe this could actually happen over the next month or so. So a bit more to go and until we are overbought here. And then we would expect a correction, which could possibly last 3 to 6 months. On the hourly, a bit of exaggeration short term. We've had a very strong acceleration early last week. We've seen a retracement of it, but as said previously, we think the envelopes are still heading up quite nicely. We're still in a bull, so we're going to have another try at it. So putting it all together, weekly still heading up, a bit exhausted, but still heading up. Daily in a similar situation. We think there's possibly another month to go. And the hourly is just a correcting down from the previous week's rapid move, but we believe we will see a continuation trade there. Finally, another reflation driver, as they call them, is oil. Oil has been correcting up since early last year. It has entered to its corrective up zones. At the moment, we believe that this situation could continue a bit, but these usually also act as resistance. So we expect over the next few months a bit of work at these stages. Now, looking at it on a more precise picture, looking at the daily or the perspective over the next few months, we believe that it's still heading up, that it's not yet overbought, that it still has a bit to go. It could possibly make a last move up above 60, but that timing-wise, this move is slowly getting exhausted. So our favorite scenario here would probably be a last move up, going to very low 60s, and then starting to correct down for a couple of months. Now, looking at the hourly, we've seen a lot of work over the month of January, yet we're back in a bull. It's a corrective bull, but it seems like it may have built the base to start moving higher. The confirmation would really be if we can make it up above these corrective targets, so above 56, 57 here, or pretty much above 57. And that move above these levels could trigger a last acceleration up. So still in a bull here, but meeting the resistance of our corrective targets. A bit more to go on the daily, possibly a few more weeks and a last move up, possibly reaching $60. And the hourly, which has coiled up and is ready to possibly start that move over the next few days. And that's it for this week. Thank you very much.